All right. Welcome back to the Know Your Numbers REI podcast, where it is our goal to equip real estate investors and business owners with the knowledge and strategies they need to pay less money to the U.S. government, keep more money in their accounts, and grow their portfolio. My name is Chris McCormack. I'm a CPA, certified tax planner, and founder of Better Books Accounting, and I'm honored to be with you here today. We're going to be covering a topic that is important, especially nowadays as we enter into the bulk of tax season. Some of you guys might be going on extension. This topic is still important. This topic is important for anybody who is in business, in real estate. It is one of those core fundamentals that we know everybody needs to get a hold of, and too many people don't get a hold of. And so we're going to cover it today. Before we get into that, I have often said, if you get any sort of value out of this, go ahead and share it with a friend, share it with someone who you think is in need of this insight, and that still holds true. But I also know that there is one thing that can give you more value than anything, and that is the Word of God. So it is going to be my intent to bring scripture to the beginning of every episode so that you guys can chew on it. And at the very least, that can be the most valuable piece of these episodes. So today's scripture comes from the book of Matthew. It says in chapter 7, verse 15, "Beware of false prophets who come to you in sheep's clothing, but inwardly are ravenous wolves. You will recognize them by their fruits. Are grapes gathered from thorn bushes or figs from thistles? So every healthy tree bears good fruit, but the diseased tree bears bad fruit." It is my prayer that all of the investors and business owners who listen to this can be bearing good fruits in their lives. And with that, we will talk about the good fruit that comes from keeping your books in order. Yes, we're talking about bookkeeping, and really the 5 pitfalls that can come from bookkeeping, bad bookkeeping, really, and how to avoid them. Because what is really on my mind more often than not is that tax strategy sometimes isn't always glamorous, right? We might talk about things like bookkeeping as being one of the best tax strategies that you can have. And it's true, because good bookkeeping is what develops a good tax strategy. Good bookkeeping is what protects you from an IRS audit or a failed IRS audit, right? Good bookkeeping will, when the IRS does come knock on your door, get them out as soon as possible. And so today, I really want to press in on what it takes to keep up with good bookkeeping, how you can avoid some of the pitfalls that people fall into, and ultimately equip you, again, with the insights you need to make sure that you're doing things properly, that you're paying as little money as possible in taxes, and growing your portfolio in the most efficient manner. So the first thing that people have trouble with when it comes to bookkeeping is that they just straight up don't do it, right? So if you are one of these people not doing bookkeeping, whether you're just getting started, you have 5, 10, 15 units, 15 properties under your belt, wherever you are, it is a must to be doing books. And I don't care if it's you or somebody else, your CPA, your bookkeeper, somebody needs to be keeping track of the numbers. If you don't know what your numbers are, hint the title of this podcast, you don't know where you are in the current moment, and you won't know how to get there to where you want to go in the future moments. So not doing bookkeeping is not good for you because of the inability to track your progress. Also, as I mentioned, not doing bookkeeping will be the quickest way to lose an audit, right? If the IRS looks at your tax return and they might have a couple questions, maybe you're filing things properly, but they just want to get a second set of eyes on it rather than just the machines that are really tracking it. They want somebody to come out there and look. And the first thing that they ask for is your books. And you're like, oh, I don't have books. I've been doing stuff in my bank account, but we don't really keep track of anything. That's a quick way to lose an audit, incur some interest and penalties, and potentially lose out on your business or open yourself up to unnecessary jail time. So first pitfall that people fall into is not doing bookkeeping. Again, it will cause you, it's the quickest way to fail an audit, but it also eliminates the ability to save on taxes. Because as your CPA, as your certified tax planner, come into your situation and want to look for ways that we can save on tax, we need to know what you're doing. And the only way to know what you're doing is by looking at your books, by taking a deep dive and seeing what you're writing off, what you're not writing off, what's being included in income. And that's only possible with your bookkeeping. So I know there's a wide range of people who listen to this podcast. I also know that people are just getting started and might not think books are important. That is not true. The best thing you can do for yourself is get yourself set up on a strong foundation, right? We think bookkeeping is one of the fundamentals to running a good business, right? We often point to sports with Steph Curry is always looking to work on his free throw, always looking to work on his 3-point shot. He's the best 3-point shooter out there, and yet he's still practicing it on a regular basis, making sure he has this form down. He practices dribbling before every game. Tiger Woods is practicing putting at every golf tournament he goes to. He's practicing chipping. He's practicing his swings. The fundamentals never go away in sports, and they won't go away in business. Get your books properly set up. Avoid pitfall number 1 by keeping up with your books, right? Don't think it's something that you can get done later. It is something that needs to be figured out right now. You will thank me when the IRS comes knocking. You will thank me when you sit down with your tax planner and you don't have to pay an exorbitant amount of fees for cleaning up your books, or you don't have to pay an excess amount of taxes because we planned accordingly. We had the right numbers, and that way we were able to find the right amount of savings. Avoid pitfall number 1 by keeping up with your books. Pitfall number 2 is that people forsake software. They don't utilize software. So many people out there, especially in the real estate space, because we like to penny pinch, we like to be good stewards of our money. We don't invest in the software that can actually help improve our inefficiencies. And instead we're sticking with a spreadsheet on our desktop or maybe our laptop, and it's costing us time. It's a mess. We don't like to do it. And it's very manual, when in reality, there's a lot of software out there that can make this very automated and take off a lot of that burden that you might feel around the bookkeeping. So utilize software. We often recommend QuickBooks. Real estate, there's Stessa, AppFolio. It really depends on where you're at and what you're doing and what your goals are to determine what software is best for you. And if you're not sure where to start, again, reach out to a tax advisor, reach out to a bookkeeper, see what they can do. A specialist, not just a generalist, because the generalist might point you to QuickBooks or Xero, when in reality, something like Stessa or AppFolio or Rentec Direct would be something that works better for you. So be sure you're working with a real estate specialist if you're in the real estate industry when it comes to bookkeeping, and make sure that you're utilizing software. I'm telling you, again, the first thing that you can do to make sure that you lose an audit is by not keeping books. The second thing you can do is to make sure that your books are in disarray and held on a spreadsheet. Something like a QuickBooks profit and loss or a Stessa cash flow statement is going to hold up a lot better. The IRS is going to see that you care a lot more about your portfolio, about your business, when you're doing things through software and actually treating it like the business it is. So you can fall into the mistake of not doing your bookkeeping. You can fall into the mistake of not utilizing software. The third pitfall that we often see is not just a trend in the bookkeeping sphere, but it is a trend in the tax and accounting sphere overall. And if you're saying procrastination, then you hit the nail on the head. So many people, I can't tell you how many people come in to our door or our virtual door and they say, I'm 6 months, I'm 12 months, I'm 18 months behind my books and I just need to be caught up and then I'll be good. Well, the first thing is, how did you get 6 months behind? Because you were not prioritizing it. You were procrastinating, right? We have this tendency to procrastinate on the things that we consider to be of lesser value. And for many of you, you think bookkeeping is of lesser value, but I'm here to tell you that that is not true. Again, by procrastinating on bookkeeping, you're procrastinating on tax savings. By procrastinating on bookkeeping, you're procrastinating on tax projections. You're procrastinating on being able to see, hey, what am I doing right now? How can I get to where I want to be in 3, 6, 12 months? You need to know your numbers and you need to know them on a regular basis. So stop procrastinating, take initiative, make a trend, make a habit of doing this on a regular basis, whether it's once a week, twice a week, every other week, whatever it is, get in the habit of doing it. And then that will give you the power to know when it's become too much for you to handle, which then gets us into pitfall number 4, which is people have a failure to delegate. As humans, we like to take a lot of responsibility ourselves, especially the people in the real estate space who are go-getters. They like to do it all. They like to do this industry and this asset class, invest in this location, and keep their books themselves in this way. And it's great for people to be knowledgeable of what's going on in their business, because if you're not procrastinating, if you're doing it and you've invested in software, well, you've done 3 things properly. You might be falling into the 4th pitfall, which is not delegating it, right? As a real estate investor, your time is best spent managing properties or acquiring new properties, networking with realtors or landlords or investors, right? Your best use, your highest and best use is likely not in the bookkeeping of your company. And therefore, you have failed to delegate at this point, and it's time to put an end to that. Delegate, 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 and do that by teaming up with somebody who you can trust, somebody you know is qualified to handle the transactions that are being done in your portfolio. A real estate tax and accounting specialist is a great asset to have when it comes to delegating your books. Now, not every CPA or tax planner does bookkeeping, so delegate the bookkeeping. This is somebody who's doing it. They're investing in software. They're doing it on a timely basis, but now it's just, they're spread too thin. Their highest and best use is investing in properties. It's going out and finding the next asset, the next person to team up with. And so it's time to delegate. So avoid pitfall number 4 by getting out in front of it. Once you sense that it's time to look elsewhere, find somebody and then run with your highest and best use. Number 5 would be the inability to properly categorize your transactions, right? Real estate is a very specific market. There are do's and don'ts when it comes to categorization, when it comes to tax preparation and the way that we handle your taxes. And if you are taking this on yourself or you're giving it off to somebody who's not qualified to handle the bookkeeping, chances are you're leaving money on the table because of the way that you're keeping your books, right? Whether something is a repair versus an improvement, whether you've capitalized your assets, whether you are depreciating, whether you can write this off, or how do you account for property taxes? Or is there a better category to place this in? Does it go into research and development versus just a continuing education, right? These are transaction specific ideas that you have to be aware of and that you have to make sure that your bookkeeper is able to decide on, right? Because not doing this, right? So let's take repairs and improvements. There's very specific verbiage in the tax code about something that's a repair versus something that's an improvement. A repair is something that can be expensed right then and there. It can be taken fully against any income you've made in the year. That's great. We like repairs because it's a dollar for dollar reduction of the income earned. An improvement is something that adds significant value to your property, right? And with an improvement, you have to add it to your assets and then depreciate it over a certain amount of years. So if you did something to your driveway, this is often found to be an improvement. If you fixed up a roof, this is often found to be an improvement. However, highly qualified tax professionals will be able to decide whether something is really a repair or an improvement. We will meticulously dive deep into the information of what you were doing when you purchased the roof repair. Were you fixing something that needed to be fixed in order for the property to be fully usable, in order for it to be a safe living space for your tenants? If that was the case, then chances are you can qualify it for a repair. But these are things that only come up if you're working with a qualified accountant, a real estate specific accountant who knows the ins and outs of the tax code and knows the difference between a repair and improvement. They know the consequences of misproperly categorizing improvements as to repairs, because that's another way to lose an audit. The IRS is going to say, hey, you weren't honest about what was a repair or an improvement. And ignorance is not a good answer, right? Because they know that you can reach out to a CPA and they can quickly tell you, hey, we need to be putting this here and this there. Okay, so these are things that you need to be aware of. These are things that cannot just be tossed aside. And if you're struggling with bookkeeping, if it's become too much to handle, if it is overwhelming, confusing, any of these feelings that often come up for people that don't fully understand or maybe don't even want to be involved in the books, it is time to reach out for help, right? This hole does not need to be dug any deeper. We can solve the problem, but it takes action, right? We don't like kicking the can of bookkeeping issues down the road because chances are you're going to be delayed on taxes. You're going to owe penalties and interest. There's going to be cleanup fees that you have to pay in order to properly get you set up just to get to ground zero, right? And once we're on ground zero, that's where the magic happens of tax strategy and planning around what's available to you in your real estate portfolio or your business. Guys, I've seen businesses with 8 figures of revenue that have procrastinated and failed to do their books right, and it is a costly endeavor to go down. And yes, the end result is peace of mind and a greater confidence in where you are in a business or investing perspective. But that doesn't come until after you've taken steps to solve these issues. So if you're not doing bookkeeping, if you're procrastinating, if you're forsaking software, if you're failing to delegate, or you're not sure about your categories, it is time for you to get set up with the right real estate accounting team. We can help you here at Better Books. We'd be happy to see if we have a good fit for you, but there's plenty of other real estate specific bookkeepers and accountants and CPAs that you can look to as well. Just make sure you're doing it properly, because failing to do this is, again, the quickest way to lose an audit, the quickest way to pay more in taxes, and the quickest way to lose time and energy on things that you don't need to be spending time and energy on. So that's all for today. I thank you for tuning in. Again, if you got any sort of value out of this, go ahead and leave us a 5-star rating and review. Do us a favor, if you know somebody who needs to hear this, go ahead and share the episode with them. You could bless them more than you know. Until next episode, God bless you and keep moving forward.